Hello everyone, Lance Ippolito here. Let's get to the free video. Um, wow. Twitter, Snapchat, what a move. It has been huge, to say the least. And Weight Watchers, of course, my darling. Actually, let's just look at it. Beautiful move here. So let's first start with Snapchat. So Snapchat here, huge move yesterday, and I actually got in calls yesterday after the move when the stock was around 19 like 70 1980, and still made almost double on the calls after the stock was up 40 something percent. So again, not too late. Even Snapchat up nearly 21 and a half, 22 pre-market here. And if you aren't a member, well, this is a free video, so a lot of people aren't. I posted from February 6th, Snapchat calls, massive buyer of the weekly calls. I keep up with the ticks, Netflix calls. Those were $2. Those went for a double the next day. And I spoke about a lot of Twitter Weight Watchers as well right before the move, and have been harping on these Twitter call buyers, and finally Twitter moving up here. I mean, Twitter is just to the moon right here, about $34, which is a huge, greater than expected move. So what do I see for the markets? And this may be something completely different from what everyone else is saying or thinking. I'm actually really bullish on the markets. I spoke about this in the member video, but some of this stuff's just too important to pass up. Every time we go near limit down or approach near limit down, which in the Dow futures we almost hit the other day, usually the market seems to bounce back very quickly and strongly. So here's our flash crash on Monday. Dow dropped 1,000. Here we are overnight, nearly limit down, and what happens at the open? Huge rally. I mean, we rallied at the open nearly 900 points. So this is all, I feel like, a huge short trap. It's trapping the shorts. That's why you had Snapchat and Twitter moving so much. People think, oh man, stocks are done, I'm going to get short. Finally goes down. They're all pressing, adding to their shorts, and then boom, just smacks them right in the face. They have to cover. I actually think the market's trade a lot higher from here. Again, looking at the ticks, it's the most important thing for the market internals. And then looking at different sectors, I was like, retail's looking weak. It's after the holidays. But very important in trading is, if everyone else is thinking retail's weak, it's after holidays. Macy's, Junk Stock, Urban Outfitters, Goose, Dillard's, Gap. These are all horrible companies. Malls are dying. What happened? Retail's actually been one of the strongest sectors recently. So, kind of thinking the opposite of what everyone else is doing, going on the other side of that has been the big trade. I know a lot of people are talking about bonds here. Bonds still looking bearish. Some people are playing TBT, which is the ultra short, basically inverse to the TLT ETF. The gold names have just completely got hammered with the now strong dollar. Boy, did that change quickly. So you can't, if you are looking for a hedge, you can't look at gold because the dollar is going up. So we're not moving to that flight to safety, which is very different than what most people are used to. If you look at interest rate sensitive stocks, home builders, you can look at the ITB or XHP home builder ETF, other ITB's home construction ETF. These are interest rate sensitive names like Toll Brothers, Lanier. They had a dead cat bounce yesterday. They're starting to look pretty bearish, and then utilities, which are very interest rate sensitive, continue to break down off this bear flag here. So if you are looking for shorts, utilities, home builders, accept those as possible short opportunities. But if you're thinking, hey, I'm going to go run and short, Netflix because it's up too much, I would just be very cautious of these names, because I know at any moment, even like an Apple, with all these big momentum names, people want to short them or sell them, they could just rip back in your face, and then money has to pour right into them. And plus, I think when you have Snapchat and Twitter doing so good on earnings, I think the possibility for a big Apple reversal here, trading back down in the 155 range, people are on their iPhones, are using them. We could see a nice bounce in Apple back to 170, and that will put some stabilization in the NASDAQ, sending it higher, reducing all that volatility. Apple is usually a market leader, and you could have forecasted, looking back, of course, hey, Apple's weak, market's going to be weak. Looking back, that sounds great, but looking forward, because that's all we could do now, is think if Apple gets a bounce to the upside, so will the Qs and also other FANG stocks. So that could be something very positive. Something like actually Microsoft holding up really strong in the market weakness. These are big names, XLK, Facebook as well. They really haven't budged too much. So looking at the names that are outperforming during the weekdays, I think is key to keep an eye on. And on that note, thanks again, everyone. Lance Ippolito here.